𝗕𝗃𝗪𝗃 has rallied up over 71% since the end of January 2024, and it still shows us with some potential moves to the upside. In today's video, we are jumping into the technical analysis on 𝗕, and I'll be sharing my thoughts and opinions on where I think this one is heading. Let's roll the intro and get right down into it. Hi guys, welcome back to another video update, and today of course guys we are checking out 𝗕𝗃𝗪𝗃. We'll be taking a look at the technical analysis here on the 4-hour time frame. We are paired up with USDT and we are using Binance as our data source. So let's kick things off, right? We have had this really interesting run to the upside, and it's actually quite an interesting structure. It has a lot of clear kind of breaks to the upside and some pretty decent corrections as well, which are causing some overlaps within our candlesticks. And we do not like to see these overlaps, okay? These overlaps in terms of price action can be a very interesting kind of tell as to kind of what is unfolding. Now, there's a few interesting things. Let's start off with our trend lines. Okay, so we're going to start down here and see how this one maps out. You can see how this actually has a bit more of an increase from our low trend line over here, and this one actually seems to be finding good support. So I'm going to remove that lower one and I'm going to extend out this one here. Okay, this seems to be the most interesting one because we get 3 touch points on this trend line, here, here, and here. It's just slight adjustment there. There we go. And it really does coincide with our 200 EMA, which is our white line coming through here. So that's looking actually really nice and tidy there, but it is quite steep in the way that it is moved. You can also see here the red line and the yellow line. The red line is our 50 EMA. That's currently coming in at $3.77.2, and our yellow line is our 50 SMA coming in at $3.72.8. And they are both acting as support. They've actually been dancing around, acting as resistance and support at times, with our 200 EMA being our main area of support. Let me show you why. Here we can see that the 200 EMA was basically acting as support until we lost it over this side here towards the end of January. It became a bit of resistance. We broke through it. We retested the 200 EMA now as support, and that 200 EMA is now lining up nicely with our upper trend line here. Okay, so all looking very, very tidy on the 200 EMA. The 50 EMA, the 50 SMA, we are finding it as support, but it does actually break down from time to time. So we're going to keep a close eye on those as well. But at the moment, actually acting as support for 𝗕𝗃𝗪𝗃. Now, when we go ahead and take our trend lines and we throw these on our upper areas, we can see that we were in this kind of, ascending wedge pattern, and we did get this breakout here, and we actually now have more of a parallel channel. So let me go ahead and draw this in right about here. So you can see here the parallel channel aspect is that we are higher highs and higher lows, but we have that overlapping candlestick pattern over here. If I can draw over here as well. Okay, now we've touched on the higher range. Are we going to come back down? And every time you can see that we are having these overlaps. Overlapping candlestick patterns are not the best, and they're not the best because from an Elliott wave theory point of view, when you have overlap, you only see these things as short-term corrections. That means there's not a clear trend. So although we are in higher highs and in higher lows, which is normally a really big bullish tell, unfortunately, the overlap in the candlesticks actually means that it's not as bullish as maybe a lot of people perceive it to be. And so we have to be quite open to the idea that this is going to be a choppy market rather than one that has clean breaks. Now, internally, we do have some really good clean breaks to the upside at places where there is very little in the way of overlap. However, when we zoom out, we do see the overlap, and that's the problem. So we have nice clean breaks, and then we move down. That's not a problem to start with, and then we have another clean break to the upside, but we create overlap within our structures, and that's the problem. So it just means that there's a lack of momentum to really get us into a trend that is really strong, and instead we've to end up breaking down, and it creates those overlapping patterns. So the overlaps are not the best, but nonetheless, it does put us in an interesting spot for 𝗕. Now, as we kind of take a look at this, is there anything in here from a pattern point of view that we should be aware of? And I'm just trying to kind of point out, I think we probably could see a inverted head and shoulders, and I think that is going to be here. Let me grab the correct tool. I don't just like to draw it randomly on the charts. I'm going to kind of help draw it with the correct tools on TradingView. And if we draw this in, I'm going to lift it up a little bit here, and we were to test this lower range, which kind of have a right shoulder forming here, then I'm going to go ahead and put it approximately here. It's not the best, of course. It is cool, of course, on an angle, so help try to draw that in a little bit better for you. Here you have a left shoulder, here you have the head, and then you have the potential for a right shoulder over here. It's also possible that we already had this with this little area over this side, and I guess that would kind of tie in better, but I'm not convinced that that is what it is. So it's not the best structured inverted head and shoulders. So I'm not like 100% saying that this one is what's in play. So keep that in mind, that it's a potential failure within the structure, because it's not the best one. I don't like the way that it's drawn, but it is something I can kind of see within the data, and it helps kind of explain why we might see this next surge to the upside, along with the support, of course, being found on the 50 EMA and the 50 SMA, and of course, you know, the 200 EMA kind of coming up quite nicely. Now, if I zoom out of this just a little bit, we can see some great moves to the upside overall from the lows of October 2023. A great move up, collapse, and until we kind of breach that high, we are not in the strongest position, unfortunately. Okay, so like everything, we had this really nice run to the upside where we kind of have this swing high right here at $4.62, and we've rallied up quite nicely here, but the overlaps are causing us a problem. And you can see that the overlaps of what we have over here, right, these particular overlaps are not something that we saw over here. For example, we came down over this side, but we didn't overlap this initial area, right? It actually was support. We then rallied up again. Now, there was a little bit of overlap here before we had this run to the upside. Again, we are not seeing the overlap between these swing highs. There's a little bit of overlap here, creating support, but otherwise, we're actually in a pretty interesting spot on the way up versus where we are with this little run here. So it's not as good, unfortunately, and that gives me a little bit of concern for near, because we could potentially see a breakdown. Higher highs and higher lows with overlapping candlestick patterns, unfortunately, has a high probability of breaking down rather than breaking up. And the opposite is also true, right? Because on the way down, where we saw here that we had these overlapping candlesticks on the way to the downside, yeah, you can see them down there. Let me go ahead and just draw some quick trend lines in so you can kind of see lower lows and lower highs. Well, with the overlapping candlesticks, they have a tendency to break upwards. And so we're just seeing the opposite now, with higher highs and higher lows. Overlapping candlesticks has the potential to break on down. We just want to be aware that there's a higher probability right now of breakdown. That's not to say that it's a guarantee, because nothing in this space is. And we can still see a break to the upside. And if we are able to rally above $4.62.5, then I'm going to be confident in thinking that we are not likely to see a significant break to the downside. Considering the nature of our correction here was very corrective, and the nature of this move to the upside is still corrective. If we were to breach $4.62.5, I think it's going to fuel a bit more of a move to the upside. If we can't, then unfortunately, I would expect us to be testing some additional lows, which would be, you know, anywhere really between $1.91 and $2.22. Incredibly bearish, I know. Just be mindful that if we were to break down, we are likely to breach the current swing low. This would not hold, in my opinion, at $4.45. So be mindful is kind of what I'm saying here. But near still has the potential for this run to the upside. We can see we've got momentum to support this on our stochastic RSIs. Let's go ahead and see if there's any divergences here. We've got some bearish divergence, and we have seen that move already play out, so I'm not too concerned about that. Volume-wise, volumes are... yeah, the volumes are not the best. They're much higher when we were rallying up, so this potential move is a bit of a fake one. So yeah, be really cautious, guys, is kind of what I'm saying here. If I were to trade near protocol, how would I do it? Well, I'd say that I'm probably going to lean more on short positions than long positions, and I would be trying to target out a slightly higher range. I do see us with moving up a little bit more, and if we were to get close to our previous swing high, I would probably be looking at putting a really tight stop loss just above the swing high, and then take profit down significantly, giving us a great risk reward ratio. And if I were to try to go long, I could trade the breakout. I probably wouldn't trade just yet. I would wait for a close candle above our swing high, tight stop loss below, and take profit with a good risk reward ratio higher than that. And of course, if I am to be trading, I'm going to be trading on BitGet. BitGet is my go-to platform for all my leverage-based trades. There is an affiliate link for BitGet in the description down below. So if you haven't already checked it out, so why not go ahead and check it out? And there are some fantastic rewards and bonuses up for grabs if you are new to the platform. There are terms and conditions associated with that. So do make sure that you are aligned to those T's and C's. That some countries and jurisdictions are not eligible for any deposit or reward bonuses or anything like that. So do make sure that you are, in one of those jurisdictions and all that kind of stuff. But all terms and conditions can be found on the website, and do understand the risks involved in trading, because it is possible that you lose your entire crypto capital whilst leverage-based trading. Know the risks and make sure you use proper risk management. More details can be found in our Discord server as well. So guys, that's going to wrap up today's video. Why don't you check out this video here where I'm talking about Solana and the potential for Solana to have another run to the upside.